Well, we're on. Welcome everyone, and for those of you now who are going to be watching this later, we thought we'd bring you into the room. So we are going to move on to the next part of this evening. You've already probably seen we've been having some dinner, hanging out together, and yeah, we're here in the room, so we're going to stay in the room and you can just enjoy this recording. So with that, we'll transition to the next phase of tonight, which is sharing the screen, putting on that, and we should be good to go. But yay, guys, welcome. I know, we've already been hanging out for a bit, but I'm just so stoked that tonight we're making history. So obviously we've had some events in the past, but this is the first of our own. And yeah, without going down story lane again, we just felt like, after doing what we were doing for years and years and years and getting such really encouraging feedback from a lot of you guys that it was time for us to do this, that it was time. So this is the first of its kind for us, getting together, building community, and obviously having training online, but also in person when we can. And so grateful for all of you guys that have traveled a long way to be here. And actually, before I forget, in case I forget, Dad and I actually went and hung out at Blackball this week. And they gave us some goodies. But it was really cool. We got to meet the co-founder, CEO, a bunch of our account managers. Really cool office. Like, I don't know if has anyone else ever been there? Oh, like top of the HSBC building on Key Street, overlooking the viaduct. Yeah, like, and they're yeah, man, just really good guys. I mean, a lot of reasons obviously why we decided to, I guess, have a little bit more of an official partnership with them. We just wanted to meet them, see someone that's local, someone that's got a good relationship with the Financial Markets Association locally. Like, we had lots of chats about on the phone and in person about why should we actually bother. I've already been basically passively recommending you over the last few years because you're interlinked with TradingView, but besides from that, why else? Anyway, so it's cool to meet them, get chatting with them, and they've offered to support us too. They might even send people, if we want, to come to live events to educate on some bits and pieces, so which is super helpful in terms of the mechanics of how this connects with this and what you're actually doing when this happens. It's like we've got people just down the road that are doing that. So with that, got some things in here. So let's work backwards. Who has driven the furthest? Because there's only... I've got something for everybody, and then a couple other things for those that have driven the furthest. So,
hello.
Okay. So,
go time.
So Zeph, so a mouse pad and a wrist support thing, and there will be enough for Selena, Coromandel as well. Those who traveled the furthest. Actually, you guys should actually stand up. Then people around the world can see who you are. So Zeph, wave at the camera. Selena, wave if they can see you there. And where's the other one? I've got another one in here. So I got two left. So hang on, we got Tauranga in the house as well. Blake, and Rotorua. I got Rotorua right here, but I've only got one left, so I'll have to get more. So you guys from Rotorua, thank you. Unless you split wrist support and mouse pad. Those mouse pads are legit. They're like this long. They're like the proper kind that you got to put a Bible and a few things on to weigh them flat. But and then everybody gets a notebook as well. So we got a whole stack in here. I'll tell you what, we might hand those out at the end of the night. That'll be easier. So I'll put the bag over here. But everybody gets a notebook, which is cool. You looks like you already got them. Well done. But yeah, you get a notebook and you get it. Oh, good fun. Well, guys, without further ado, let's just rip into the next phase of tonight. So instead of doing this on Zoom, we get to do it in person. So put your hands together for Dad as he comes up to rip into tonight's trading.
Okay, I've got a few notes here. Now, I want to apologize in advance because I'm now on Taran's computer. Excuses, and his mouse is very sensitive. So first I'm going to change a few things here. It's funny, on my own computer, I'll just give a bit of a split screen here. There we go. And what we want here, have you got all your goodies here? US 30, and this will also be US 30. We'll shut that off, and this will make 1 minute. And this, who knows what time period this is going to be. There we go, another diary for Zeph. And there we go, that looks more what I'm used to. Cool, is it all clear where you guys are there? So let me just, so basically version 2 is going to have a few little changes. So we are making the The 21 is going to be full on white. So we won't talk too much about that tonight. The 21 is now, and the 13, we're just going to have, your colors are similar to mine. It's funny with, yeah.
21 is the mid-BB, right?
Yeah, that's the one. So it's much easier to read when it's all white. I mean, realize the secret sauce in this thing is the 55. So we are going to, in version 2, we are going to have a counter trend signal. So you can see this, see if yours works the same as mine. So here was the first, I mean, look at this quickly there. Can you see a little C? Yeah. I've made it CT on my computer now. I mean, we'll upgrade it. But there was a good counter trend signal on the Dow. And that thing went up all the way up. Does yours not work like mine, Ty? Hold it. So that thing, it actually went up to a big round number right up there, but there was just up to the 233 was already 57 pips there, if you stayed in that long. So there is going to be, I won't talk too much about it, but version 2 will have a counter trend. We first want to get people familiar with trend.
Can we see what it was looking like on the 3 at that time?
Yep. So I think it came in later on the 3. What time was that? That was at 7:03. So let's have a look here, 7:03. Yeah, that was,
Oh, yes, it's still green.
yep, that was a good counter trend. What made that counter trend good for confirmation on a higher time frame, on the 3 minute, you got a diamond. So there was buy momentum, and at the same time, let me just can I delete some stuff here, Ty? I'm a bit, what's it, OCD, whatever it is, it's got to look right to me. No,
That's on your CDO.
CDO, what's that?
That's really OCD, but the letters have to be in the right order.
Oh my God. I just feel set free right there, CDO.
The protocol's important.
So that was a good counter trend signal because you always look for high time frame confirmation. I mean, I'll go through the rules when you do this next year. But when you get a counter trend signal and on the 3 minute you had the diamond, plus the other magic source is when the Trendforce oscillator goes bright green. So that counter trend was definitely going to move. So that was a great trade there. So we won't spend too much time. I'm just figuring out, because you see there's another signal there, you would have a lot more pips. So I'm just got to figure out and back test whether we just have one signal per move or we have more than one, which means you could theoretically enter again on a signal. So I'm leaning, more is better than less for this, but I'm going to just do some more back testing. But cool, you're enjoying this? Yeah. This is such fun, eh? I'm loving this, I don't know if I've chatted to so many people. Honestly, I get more thrill about trading and educating and seeing people succeed than trading myself. Yeah. So I love tinkering, Ty knows that. So we are constantly, I'm trading with version 2, and we know we can make this better and make us all more profitable. So I'm really passionate about training and developing a really top-class indicator and seeing people become financially free. So I'm trading, but I told somebody on testing, I've dropped my lot size down. But honestly, my heart is more to see other people succeed than myself. I know I will, and I'm profitable, and I've been blessed in my life. But I really am very passionate about seeing people succeed in trading. And that's why I'm excited for our community so much. This is like, how many traders in the world get to be part of a community, And then I'm here who's written it. I say that humbly. So we can, answer questions and help people. So, I think this is just like, I don't know how spiritual everyone is, but there's a verse in the Bible that says, do not despise that have small beginnings. So this is just the beginning. We only started like a few weeks back, and this is our first live event, but the feedback's been really good. So I want to talk mainly about how to enter an existing trend. I think we've all felt the frustration, especially, most of us are not full-time traders yet, and you get on the charts, you've missed the signal. And the move starts, and then should I get in, shouldn't I? And my two biggest ways I lost money was, one was trying to pick the breakout out of range, and the other one was trying to join a move that had started already. And so that's why we need really good rules. So I've got my 10 over here. The principle is the earlier you get into a move, the better. That is the bottom line. And so the further away that you enter from a move, let me just make everything is like tinier, Ty. Where am I? Ta-da! There we go. So the earlier you can get into a move, the better. That's the bottom line. And the later you get in is the risk. Sorry? At the beginning of the move. Yeah, so the earlier you can get in, the better. So there are just absolute. So let me deal with the no-no. So I've got a few points here. The first no-no, and I'll explain why, is the further price moves away from the trend zone. So I call this the trading trend zone. The further price moves away, the riskier it becomes to enter a move. So I would never enter a move, say on that candle. Maybe that one, by the time you start getting down here, and that is high risk. And the reason is because price always returns to the average. So, I've spent the last year and I kept giving these two moving averages. That's a 30 and that's a 21. I don't know how many combinations you went through. I tried exponential moving averages, simple moving averages, Hull moving averages. But I tried to work out different numbers. Yeah, we tried multiple things and back-tested to work out the best, most likelihood of predicting trend and pullbacks and re-entering trades. So eventually we settled on a 13 and a 21, which are both, because I'm CDO, they are fib numbers. Everything's based on fib numbers, and I've explained that before. So the reason, because price always pulls back. You can see pulls back into the averages, always. Price moves up, pulls back, moves away, pulls back constantly. And so the safety of my signal is that in like 99.8756 times, well, not exactly, but the stop loss will always be on the other side of a moving average, which means if price does pull back after a candle or two, it's going to bounce off a moving average and then continue with the trend. And I was saying earlier, the way I've designed the sell and buy signal is that if you follow the rules, it always comes with momentum, and generally you'll notice that you don't get pullbacks most often up to TP3. So it's specially been designed like that to be profitable. But there are times when you want to re-enter a trade. So what is safe? Now, the reason why I say it's unsafe, for example, if you decided to enter on this candle over here, where are you going to put your stop loss? Your safe stop loss would be the closest moving average. So if we went there, you'd have to put your stop loss way back up here somewhere. So you're going to need like a 21 pip stop loss. And that's quite risky if you're entering like on the fourth candle of a trade, because that could pull back on the next candle. You just don't know. So, if you took this trade from the start, yes, you would have needed a fair size stop loss here. But see, this is why this computer's misbehaving. Anyway, you would need a fair size stop loss there, but nothing like yours lags strange. Look, mine would have, that is weird. Look, it's going the wrong way. Yours is upside down. Now that's very helpful. Okay, so you would have needed about an 18 pip stop loss, no, 15, whatever. But that's safe at the beginning, because if it pulled back, it's going to bounce off this area. But right, so if you try, okay, you're going to enter over here. Look, if you try to enter there, your safe stop loss would have been, you would need about I'm trying to work out, you would need about a 40 pip stop loss.
Basically gambling.
Yeah, gambling. So, if you break the rules, remember you're gambling. It's all about probabilities. So that candle, you need a 40 pip stop loss. And then for 2 to 1, you need to run 80 pips. Now, that's highly unlikely to run 80 pips from there. So the later you enter, the higher the risk, the bigger your stop loss is, and the lower the probability of getting a 2 to 1. And so that's why no late entry. There's a common saying in trading is that entering late is like trying to catch a falling knife. But the good news is when price does pull back, these zones are really like liquidity zones. So when price pulls in there, it's likely to move the other way. So this is the trade. I took 2 trades. So this was my second trade on Saturday. But if we look at the 3-minute, so you can see this move started earlier and it pulled back into the averages. Can you see whenever it pulls back, it rejects a line and then this moves straight down in line with that signal. So I see these zones like liquidity zones. So whenever price pulls back and you're trading with trend, it gets energy from that trading trend zone. So when it pulls in, it gets energy, gets liquidity, and moves down. And it's the same. You'll see when it dips, look, I've got my own little terminology. So when I'm in a buy, if it dips its toe in the river, it's going to move up. Yeah, if it sticks its hand up in the clouds, it's going to move down. So you can see here, look at this. This is the counter trend trade. It pulled back into the trading trend zone, got some energy, and boom, went up another. There was still quite a lot of pips. Now your mouse is not behaving, but there was at least another 20 pips, that's still a lot of pips. And so the key, so these are some of the rules. Number one, no late entry. All right, so that is the first thing. Don't enter late. The further down the track you enter, the bigger the risk you're taking. So I would never, beyond maybe one candle late, two, but once you start getting down here, and I know it's tempting. I mean, how many times I've seen this huge move, I jump in, and before I know, it's pulled back 20 pips, stops you out, and then it drops down another 80. It's just not worth it. And the higher your lot size get, that's how it works. The more it's going to be painful. So trading is discipline and patience. You have to stick to the rules. Just by another random thing I do, because I've made this mistake, is I like to put in big round numbers. So, I mean, my charts are set up. So there's a big round number there. And that's yours is about the right proportion. There's 44,700 and 44,600 down here. Always, when I get on the charts, I'll make sure I can see, I like on the Dow especially, and of course gold, you must find your own rhythm there. The Dow and the Nas, I make sure I can see 100 pip clearance. Because when I was a beginner trader, I'd jump on the charts, I just adjust it so it looked normal. Then I'd jump in a trade, I need a 60 pip stop loss. Meanwhile, there's been this massive move. They're 50 pip candles. So when you can see the scale, I always look at 100 pips, then you get a feel about the size of the candles and the move. Has anyone happened to anyone? You've just got on, adjusted it so the candles kind of look normal, realizing that there's like a 200 pip move and you need like a 50 pip stop loss. So be warned. Okay, so no late entry. You pardon?
Unless you're trading at the Asia pre-London, then it's like tiny candles.
Yeah. Yeah, you just got to, everyone's trading at different zones, different times, different instruments, but you find your rhythm and see what works with where you trade. All right, now the second rule, a signal is always preferable. All right, so that's the good thing about this indicator, is that there's lots of opportunities to re-enter trades because there are signals going off all the time at some point. So this move really began all the way, this downtrend began, let's say right at the peak, that began at, I'm blocking the time, 5:03. So I got up a bit late on Saturday, and so I got in when that move was already moving down. I probably got to my computer with a cup of coffee around there. So there was no ways I was going to enter that trade. So I was going to wait for a pullback. So it pulled back right over here at 6 o'clock. And so what made this safe to enter? Well, there's a whole lot of stuff that made this a no-brainer. So firstly, here you got a sell signal. So that's the good thing about the 1 minute, that often if there's a big pullback, you actually get a signal. So it's almost like entering a fresh trade, but actually it's a part of a bigger 3-minute move from 5 o'clock. So there's one signal there that says sell. What else can you see there on the 1 minute? Right, that's great. The orbs, that's another point coming. It's right on the right. Now remember, they do repaint. Those orbs maybe a little bit further out, but I know that was definitely towards the right-hand side. Yep, not in the middle. Plus you can see you got that triangle, that is reverse re-enter. And plus the main trend bar in the Trendforce oscillator was also red. So I mean, that was a really good signal.
Is out of the three on the Trendforce oscillator, the three different colors, is there any that you put more weight on or any that you put less weight on?
Well, the middle one is the main, I call it the main trend bar. I mean, the top line will always tend to go off first. If it goes off together, it means it's a strong trend. So the top two immediately, if you look back at some trades, you can see there, the trend line there took about 4 candles before it went red. So generally that gives you a bit of a warning. But when they instantly go, it's going to be a good move. But I was watching this move, waiting for it to pull back. It was a downtrend. I knew it would move again. But what sealed when I looked, okay, boom, sell signal. I looked at the 3-minute, and as soon as I saw a diamond and the oscillator, and the tipping point for me was when I saw that triangle down, the reverse re-enter on a 3-minute. So whenever the 3-minute signal combines with the 1-minute signal, it's always going to move. And those trades generally always get you into a break-even position quite early. I mean, sometimes like if the trade is not perfect, I won't move my stop loss to break even. But with this one, I moved it quite quickly. After a candle or two, I was already break even. And so always look at high time frames. So on the 3-minute signal, things are like 3 times more effective than the one. So seeing the diamond there, plus the oscillator, plus the triangle down, I was in. So number 2 was look for signals. Then number 3, Vic has just mentioned the bands. So remember, they do repaint, but I know from memory that this band wouldn't have been as tight, but the signal was definitely, towards the right. So the bands, the similar rules apply to a normal trade. They've got to be the right color, heading in the right direction, and also they need to be towards the right-hand side. And so you can see, this would have repainted on the 3-minute. So if it's the wrong side, even better. That would have been a little bit higher up. But the orbs are absolutely perfect. They were giving you also a go-ahead there. Then number 4. You can't see it so clearly here, but it's clear. I call them these reversal support and resistance lines. Can you see these lines plot whenever trade can potentially reverse? So we can see one plotted over here, and you can't see there's a little one. It's kind of, unfortunately, this can't be perfect, but one you can see if I hover there, you can see a small one there. So these are huge. So I would never re-enter a trade unless I'm on the right side, which means below for a sell, above for a buy, of these little white lines. They're very powerful for support and resistance. So we can see on the 3-minute, price try to break above, and how many candles? There were is that 5 candles? So for 15 minutes, price was deciding whether to go up, reverse, go up, or go down, and then on the diamond, price broke below. So I'm always looking at these white lines. If you see, so generally for re-entering a trade, this was a counter trend trade, but they are massive. That's why I added them to this strategy. You can see here, although price, it was a little bit far away from me, but price did dip its foot in the river there. And when you get, this is a pattern, now we will come to this. There's so much I could say. I'm trying to not get too excited and foam at the mouth with my CDO. But there are kind of 3 ways, there's 100 ways to trade, but either you're trading with trend, or you're doing counter trend trades, or you're doing reversals. Now reversals, trading with trend's the easiest. Counter trend, I'm trying to make it easier by bringing the signal in, but reverse trading is another kettle of fish. But when you get, I don't want you to try this at home now.
Define the difference for a second.
Okay, so reversal is when you catch something right at the bottom. Okay, so it's a major, you've actually found the bottom of the move. But the hardest thing in trading, even, I don't know if any of you listen to David Paul, he's very good on the psychology of trading. He said the hardest thing in trading is to find the bottom of the move. So reversals are if you can pick it out. Now there is a way with this, there's a lot more that's indicated than we're saying now, but there are ways you can pick out those reversals, but we won't cover them now. But these lines are important for reversals, we're not going there. But when you get a certain pattern, we can give you some of our tricks. That's what I like about Heiken-Ashi. When you get a bearish, which is a flat top, I'm giving this one away now, and you get a doji and a flat bottom, that's one of the secret sources of Heiken-Ashi candles. Yeah, and the opposite is true for the other way around. So whenever you see a nice bearish Heiken-Ashi, and you get a doji, which has got a wick on both sides and a flat bottom, that's a sign that trade's going to move. Especially when it's rejected one of my reversal support and resistance lines. So I'm saying a lot more tonight than I was going to, but that it is far away. It is far away from the river, so from the trading trend zone. But the fact that you got that pattern, and when you get its bum sitting on the line, excuse my language, that's how I look at it. When you get a flat bottom on the line, it's going to move. So there was a nice 20 pips in that little move there.
Look at the top of that move. Go right left to the cursor.
Sorry?
Just go further up and look at when it turns around. Yep, there, left.
Where?
There.
You got the same pattern, but
Pattern at the top.
Yeah.
The last bright bullish candle into a doji.
Doji, a flat bottom.
Flat bottom and the other way.
Yeah, that is the strength. So, I do those, but don't do them yet.
That pattern,
Don't do them.
go and
Don't.
look for that pattern. Turn everything off and just go look for that pattern.
Yeah.
You have no idea.
Okay, so I'll give it away. So don't do this yet. But there was.
Don't break rules with this
Okay,
pattern.
but I took this trade.
Know the pattern.
I took about 15 pips, I think, on that trade there. But it broke all the rules. But I saw a bearish. I saw a doji. I saw a bullish with its bum on S4. So I thought that's going to at least head up to the 55. So I took 15 pips easy there. And then I took another, 23 coming down. But look, don't do that yet. I'm just saying you what's possible with this indicator.
We're
We're not doing
but that.
we're not doing reversals yet, so don't try that at home. But I tell you, there's so much in this thing you have no idea. I mean, eventually I want to do like a live Zoom on how to make like 100 pips in the morning, and then you can once you get to learn the patterns, you can just fly through it, and then it becomes really fun. But look, I'm giving some secrets away already. Okay, the doji. So look, this is why I use Hakanashi, but look, normal candles work fine.
Sorry, I mean, Hakanashi. The question is where does price close on Hakanashi candle? Is it the top of the wick or is it the top of the?
No, it's the top of the, so that closes where that bar is. So that would the close there. So if you with a doji, the close will be at the bottom of that bar. So dojis have wicks on both sides. That's the simplicity with Hakanashi. They're either bearish doji or bullish. So flat, there's obviously a bearish candle, flat bottom. That's a bullish. There's a bearish flat top. But they're amazing with trends. So when you do, I shouldn't tell you this, but when you do reversals on high time frames and you see bearish doji bullish or bullish doji bearish, tell you those things move. And the higher the time frame, the more accurate Hakanashi become. But look, we'll get to that sometime next year. Just get the basics. Yeah.
You got the extra hot sauce.
Yeah.
You're just softening it
So-
up, just giving gold right now.
Yeah, so I've got a little,
You just went hot and spicy on you right there.
it's my CDO, that's the trouble. I had the Nando's.
Not expecting that.
Okay. Anyway, but I mean, that's the joy. There's like way more to this than meets the eye. And I've got a little signal for reversals, but we may never do that, but it's there. But if you're a beginner and you're still learning, you will lose more money than you'll gain, because they're not that easy to pick up. There's certain time when you get clusters, but we won't talk about clusters tonight. There we go. Oh my gosh. There's so much to this, guys. We're scratching the surface. But with what we know, there's more than enough to be profitable and successful. All right. So I'll talk about the orbs. I think we understand orbs by now. Okay. The number 4 was these are the lines. So these lines are great. So, I mean, here was another signal later on. I mean, it wasn't correctly aligned, so that wouldn't have gone very far. But can you see how you wouldn't have taken this sell unless price closed below one of those reversal support and resistance lines? So these lines are massive. You go and back test those lines, they are massive. You'll see them everywhere. So you wouldn't have taken this buy unless price closed above. But we're talking about re-entry tonight, and where we 6 o'clock. I've got way too excited. I've gone off script.
Even the doji right before that 3-minute diamond. That doji wicked the 21.
Yeah, I mean,
That whole rejection of a line, like if you just see that over and over again.
That
rejecting
is-
a strong line.
yeah.
bearish candle, bearish candle.
That's the reason why we chose. You can see how price respected the 13. And once it hits, that's like electricity getting a shock down if you're in a downtrend. Once you touch the white line. That's why we changed it to white, so it's way easier to read the chart. So I mean, there's other things, there's so much to say. I mean, you can see, this is our magic source is the 55. It tested the 55 twice there, tested it there, rejected it. And when you get a flat bottom after you rejected an EMA like that, it's definitely going to move. But I mean, we'll talk about that another training time. So the white line, now this is the real key, is the MACD. Now Ty is way better than me on the MACD, but there's certain times you never enter a trade. I always look at the MACD. The MACD is one of the greatest indicators for measuring trend. So once the MACD, you can see it crosses over and there's separation, that's great. But you don't want to enter a trade. This is when it becomes risky. The best time to enter a trade, it's preferable if the crossover is above 0, but in this case, it's still fine. But you can see here was a sell signal. Can you see what the MACD is looking like here? Is there any separation? Is it the right color? So I have a rule. Sometimes, I mean, that still move. There may be 25 pips in that move, but as a rule, I never re-enter a trade if the MACD trend zone is like not right. If the signal line, so the inside line is always the MACD line, which is slightly thicker. The outside line is the signal line. If they are running parallel or they are the wrong color, I would have ignored that trade because the risk is too high. Sometimes you'll ignore it and it'll drop 50 pips and the whole move will start. But on probabilities, if you enter a trade, if you re-enter a trade and the MACD is not the right color and there's not separating, it's running parallel, more than often than not, you'll make a loss. So that is a key part for re-entering. Make sure that there's separation or they're crossing over. So on the 3, it was just crossing over. But the fact that there was separation there, and if you've called up the 8-minute was in full-on bearish mode. There was separation with the trading trend zone, and the MACD was also wonderfully separated. So I'll normally have a sliver of the 8-minute on the left to check. So that's where I use the MACD a lot, is to re-enter, make sure that it's looking like that. I mean, can you also, that section of the MACD looks very different to that section of the MACD. You want to avoid that completely. All right.
It's like
Running out of juice, that's it. It's running, the trend is weak. Okay, then I've already mentioned the 55 is like, this is the real secret sauce of this indicator. I always look, if I re-enter, what is the 55 looking like? Okay, we can't see, but it went bright probably on the second candle. But if I'm re-entering, I'm looking. It wasn't bright on the 3-minute, but if it was, that would be a great indication. So I'm always looking at this, at the 55. This thing is sacred. When that thing goes bright, you know, the trade tends to drop quite a bit. So I keep an eye open. And also for staying in a trade, you know, that 55, I mean, it's almost like a fluke. Honestly, I was praying one day and I felt, I was walking my dog and I felt the Spirit say, go back. And what you were doing, trying to do on the 13 and 21, apply that, the same logic to the 55. And I needed to adjust the numbers, but it often happens the first time I fiddled with the numbers and I got it and I reloaded it, I thought, flip, this is like radical. This is really works. So that is, keep an eye on that 55. So especially for re-entering, you know, it's like, it's one of the big secret sources of this indicator. And especially if you get a signal, it doesn't happen every time, but if you get a sell signal and it's already bright red above, or you get a buy signal and it's bright green below already, those trades always run. And you are, in almost every case, you're going to get into a break-free position before, you know, and you're likely to make no losses on that trade. You can see, I hate making losses. That's why I've designed this thing. I hate, yes.
When do you go to break even?
It depends on what the trade looks like, you know, and if it's like, if it's a really strong trade and like the 55's bright and the candles are bright, then often on the second candle, if you learn to read, after a while, it becomes, you're after just looking. Sometimes I press sell and I just wait. I don't even put my stop. I press sell and I immediately move my stop loss to 2. And then I put that's why I try to design this thing that you would get in at the moment of greatest acceleration. That was my logic behind it. So always.
There are lines in the way.
Sorry?
What if there were like, there's momentum coming in, the 55 in bright green, but there was not much space?
Yeah, well, it depends. There's got to be space to get to TP1. Yeah. So I mean, if it can't get to TP1, then I tend to leave it. But sometimes I do take a chance. When you learn to read, I look at high time frames. I look at the 8. I look at the 3. Because remember, high time frames always bully lower time frames. So I mean, I was conservative on Saturday because it's back.
Just check. Go on.
Yeah.
Like the star signal. What time was it exactly?
6
a.m. Yeah.
So,
So
yeah.
it's like, and to the right of that, like this is what goes through my brain with that. We're also on 44,700. So you got a big round number and you got a 1 hour candle close. So if, for instance, if I see a 1 hour candle or 4 hour candle close on the other side of like a big round number or something of that nature, suddenly I know price is closed on the other side of something.
That's good.
Those are the little nuances you start to pick up, which kind of, you might not see enough clear space, but if that's just happened, and if the 55 is bright, I know there's like a very high percentage probability chance that it will break through those lines. Because there's always going to be lines. There will be lines you can't see that you can see.
What's the 1 hour candle? How do you see that?
Just having another thing and kind of referencing, I know like, okay, there's going to be a 1 hour candle close on this candle. So wherever this candle, even on 1 minute, even if I'm looking at that 1 minute candle, I know the 1 hour candle just closed there, kind of thing, on that side of it. Anyway, so keep going.
And also, I mean, look, there's 100 other things. When there's like a crossover like this, that's a good crossover. So even between the 55 and 233 now, they got like, that means that is probably going to move because you got that gap. So those kind of crossovers are always very good for momentum. So that had just crossed over and you got sellers entering on the 3 minute, that was definitely going to move. All right, are you learning something? Okay, so that was number 6 was the 55. Yeah, then number 7, Zeph just covered that. Watch out for potential reversal points. So for example, I was very conservative with this trade. So because I'd already got about 15 pips there, and I just go for 30. I mean, sometimes I've got 200, but I thought, but psychologically, it's so good to end the week. I do that often on Saturday. The best feeling is if I can hit a goal, you walk away. But the psychology of trading is phenomenal for confidence. You don't want to give it back at the end of the week. Then the whole Sunday, Monday, you know.
Just trying to get it back on
So I took that reversal, and I only needed less than 20 pips. So I don't know why yours misbehaves. TP1 there we go, was at 23 pips or something. And this was green at the time. So remember, once it breaks through, it changes to become a resistance zone. That was green. I thought, I've got 15. I just need 15 and a happy weekend. I thought I'm just going for TP1. And I hit 23 pips and I thought I was happy. And it went all the way to TP3, but I had no FOMO. I'd rather end the week on a good note. I hit my daily goal, walk away. I actually logged out of my broker account to make sure I wasn't tempted because other signals came. But look, yeah, I'm saying don't have to trade like me. That's just how I think, you know. And if it's early in the week if the market's giving you money, take it. If they're good, strong signals. And the trouble is, I've said it to 100 people, it's been really tough. I even said to Ty, look, we're launching this thing, and this is the worst time in terms of the market because it's so rangy. And that's why it has. So if you've been profitable now, you've been really good in the last month. It's really been tough. But eventually the market, there'll be big moves and you can be fussy. And good setups, I know from testing this, good setups will come that will really guarantee you guys pips. All right, so I'm getting too excited. Time's running out here.
I guess the good signals are really obvious.
Yes, they are very obvious.
When you're looking for them waiting, is this good or not? But when they are, then you know it.
Yeah, no, it becomes eventually, it looks like a Christmas tree. I mean, obviously, I've been putting this together, so I can take one look and I know what's happening. Initially, it's like you got to, what's that line? What's that zone? Eventually, it becomes subconscious. You go to sleep at night, you wake up in the morning, and you take one look. Like now, someone asked me, is that trade any good? I just said no. I just didn't have to give an explanation. I just took one look. I thought I could just say no. It's going to go nowhere. It's not going to get to TP1, too risky. And we'll all be like that. That's the great thing. We're going to grow. All right, so Zeph raised it. Look out for what may be in the way. So that for me, if I hadn't got 15, I would have done a trailing stop loss, and locked in. I would have locked in at TP1. And if it came back, okay, I've got TP1, but I did go to TP3. I may have let it run longer. And of course, the joy of these candles, once it goes bright red or bright green, it's going to drop further. So that's what I like about this. All right, so look out for anything. Look for support and resistance zones. Look for lines. Look for big round numbers. Look for these pivot points because they are very accurate for support. You can see how it's supported, the S4 over here, often to the millimeter. So you got to look out. If you're to re-enter, is there enough clear space? Now, very often you won't get, like in this case, okay, we got a sell signal. So you would have got, over here, you would have got some take profit points. In some cases, if you only trade in the 3 minute, there was no sell signal. You wouldn't have got, a stop loss. But eventually, just, do whatever safe. I would have put my stop loss there and just work out a 2-to-1. All right, so look out for what may be in the way. Okay, that was number 7, almost done. Number 8. Now, I wanted a whole session on this. But the reason why we really changed this to white is that different people have different measures for trend and safety. But this SMA 21, which is a simple moving average, is one of the best moving averages for trend. So especially if you're comparing with a higher time frame, one thing I always look at is what is the angle of the 21 on the higher time frame. If you go and backtest this, it's crazy. Price always ends up following the 21. Someone said it's in some strategies, it's a mid BB, which is the mid Bollinger Band. So that's a different strategy, but the actual 21 is massive. So if I was looking at this trade, sell, now it's turning over. So it's not giving me a lot of information because there was a pullback. But if you look on the 3 minute, how healthy is the 21 in the 3 minute? I mean, that is pointing straight down. And that's one of the greatest measures of trend. And when it's the wrong way, I don't know if I can just haven't looked at an example, but price always comes back. That's the crazy thing. If you just look at examples, and I haven't really looked, but I'm trying to think of where you would want to take a trade, but it's the wrong way around. Okay, that's range. And when it's going sideways, that is also danger. The orbs will tell you. But you can see, okay, here's not a good idea, but if you entered here, can you see it's pointing down? There'll always be a pullback. So price will always pull back until it finds its way. So, I mean, there's usually good examples, but
News. Look at that thing.
What's that?
That's New York Open News or something.
Yeah.
In the morning.
Yeah, that was New York Open.
Manipulations.
Yeah. So just remember at the moment that the New York lunchtime is between 6 and 7 now, which is the worst. Unfortunately, it's the worst time. So, I mean, I took a move at 6. Yeah, but often, so there's a move around about 5 o'clock in the morning, yeah. So there's almost every morning, if you look back, there's always a move around 5 o'clock. So if you want to trade before lunch break, you need to get up at 5, quarter to 5, make your coffee, 10 to 5. So you're ready around 5 o'clock to get that move. Because if you get up at 5:30 and you make your coffee, you're probably going to be halfway through a move you couldn't enter. Then lunch. Now, sometimes it's crazy over lunch, but more often than not, 6 to 7 o'clock is rangy. Then suddenly at 7, it moves again. So that happens more often than not.
There's often rangy coming into 6 as well as London closes, right?
Yeah, it can be too, yep. So, but I've noticed in the last little while, there's always been a move around 5 o'clock. And then 6 o'clock goes flat. All right, anyway, so the SMA 21, it's a great measure of trend. So I'm trying to think if there's an example on the 1 minute. What time was that? I'm at 4:54. What is happening at? Maybe not a good example. I don't want to waste too much time looking here. You can see there. So there it's like on the 3 minute, it's flat. So okay, I want to take that buy. I'm looking, can you see, if you look at there was a buy signal, okay, you could have got some pips there. But you would have broken the rules to get there because that SMA, it's on its way down. And that always means it's going to pull back. And that's exactly what happened. That trade didn't go that far and obviously pulled down the trend reverse. So I'll always look, whatever time frame I'm trading, I'll always look at the 21 to see what angle it is. So again, this trade here, 6 o'clock, that was a done deal. That was heading straight down. That made it a very safe entry. All right, so almost done for the night. That was number 8. Number 9. Yeah, look at, what is key is to look at trend lines, whether you look at trend lines, flags, wedges, they are huge also for re-entering a trade. So do you guys use those? So for example, with this trade, I'm looking 1 hour out of my, here we go. So if, for example, we look at the 3 minute, when price breaks a trend line, yours is not set up like mine, so we have to talk.
Draw a line. Sort it outside.
Okay.
You'll turn off the magnet.
What is wrong with this thing?
Magnet on the left-hand side.
Where's the magnet?
See the blue, go to the left-hand menu, it's blue. Click it off. There you go. Now you
Okay.
can draw your line wherever you want.
So, so keep an eye on these things, whether you call them channels. I'm sorry, I look like a non-core audio, definitely not CDO, EFAG, what's it, what am I, what was I? CDO. Okay, so here you can see, you could have drawn a flag there, you also could have drawn there's a bit of a bearish wedge too, if you took there.
Right click on those 2 white lines you've drawn that are angling towards 1 o'clock.
Yeah,
click on them,
yeah.
and then click on sync in layer or sync globally. Ping.
Oh, there we go, thank
You
you.
can do the same to the other. So I do that a lot. And if I'm drawing lines on a 5-minute chart or a 1 hour chart, something different, and I want to see that, just do that. And it just sends it to all your different ones.
Hey.
Really good.
Okay, so when there's, now it's clear from, if you follow this from the start, it's clear we're in a downtrend and this is a pullback. And so by drawing these wedges, flags, or trend lines, it's also a healthy way to know if it's going to move. So here, clearly, I mean, I just do trend lines and I sometimes do wedges. I don't draw flags, but they're also useful. I mean, you don't have to draw them, But I mean, there's these funny laws in trading with flags that, like if you took this flag, now I'm going to look terrible doing this, so I'm just going to use your trend line. It will work. So if you took a flag up to the open of that move, and you copied that, clone it, then generally when it breaks that, it moves the same distance the other way, which it did almost exactly. Can you get out of there?
Back up at the top. Got it. Yeah, let it touch. It's too low. Drag it up.
What am I doing?
You just drag it till it touches the white
Oh,
line.
sorry, yeah.
There you go.
I mean, this is like, I've got like a giant iMac. It feels like I'm on a matchbox here looking. But look, you don't have to get that technical, but when you get channels like that and you get flags, I mean, more often than not, you can actually work out where that move's going to go. But look, I don't do that because there's enough information indicator not to do that. So, but if you want to do it, some of you may be flag orientated. Anyone watch the Big Bang Theory? Fun with flags? Sheldon, okay. I'm reaching some people. All right, but it's good. I tend to just draw little trend lines all the time. So I would have, these ones are great because when price breaks a trend line, it's going to move. So can I delete these, Ty? Is there like, I just press my, okay, so look for trend lines, flags, and wedges. So I just find trend lines are enough. So I'm just drawing one line if there's enough points, and then I wait for it to break. And finally, it's 8:15. We want it to end already. This is the other key. Look, so if you're re-entering a trade, always look at high time frames and look at the angle of the trend lines. So I mean, this is great because the 233, which is the 15-minute, that is pointing down. Look at the 55 and the 3-minute, that's pointing right down. That's already broken. Okay, that's a bit flat. The 4-hour, the 1 hour is pointing down. High time frames, everything's down. It just makes it safer. So I'm always looking at high time frames to check those trend zones, those EMAs, are they pointed in the right direction? Because if they are pointing in the right direction of the trend you're entering, there's a higher probability that it's going to reach your target. All right, so those are my 10 things. So I'll just read them out again, and I'll send these notes to Ty, and he'll make them look beautiful, and you'll post them in the feed. So you want to wait for a pullback. Don't enter late. The further away the candles are pulled away from those trading trend zones, you need a huge stop loss for safety, and you'll never get a 2-to-1. Number 2, a signal is preferable. So look at the Trendforce oscillator, look for buyers or sellers entering, look for that triangle, which is reverse re-enter. Those kind of things are important. Number 3, the orbs. Everyone seems to be familiar with those. Look for the little white lines, the support and resistance lines that we looked at over here. It's got to be on the other side before you re-enter. Look at the MACD trend zone. Don't enter if it's the wrong color or it's flat, running parallel. Wait, make sure there's some separation and the trend is increasing. Secret source, keep an eye on the 55. What color is that? Or if it's not the right color, at least look, is the angle correct? Number 7, keep an eye for potential reversal points. Thanks, Zeph. Big round numbers, support and resistance zones, pivot points. Number 8, look at the angle of the 21, which is going to be white with version 2. You can change it to white now. Number 9, look for trend lines or flags or, the wedges, those kind of things. They're very good. And the last one was look at the angle of the higher time frame trend lines or even the current trend zones that you're in. So if you apply those 10 things, you should safely enter a trade that's already started. You won't get frustrated because you've woken up with your coffee and it started 10 minutes ago. You now know how to re-enter. So any last questions? We have gone a bit later, or
When can we have version 2?
version we're gonna next month. I said I was chatting. Who's I chatting to? The only thing I'm looking at now is, so it's way more complicated. So you got a signal there, kind of trend. You got another one there. So I'm just trying to work out whether I just have one per move. It just plots one and then. Or should I have more than one? Because on big moves, you sometimes get 3. Like I was saying, I did about, I don't know, 30 or 40 pips. I just entered 3 and took 10 to 15 at a time. So I'm thinking maybe more is better than less, because it does give you more opportunities, especially this one. What's good about this counter trend? Why would that make it a good entry? Okay,
Glorious angle.
okay, we have moved a little bit away, but okay, can you see there's a difference in the color of the candles there?
Yeah.
That means a lot more buyers are jumping in. So that would have made it a safe entry point. So at this stage, the only trouble is you will get a few false ones, but then the rules will tell you not to take them. For example, if you got like
Can you drag the 3 minute to the same place?
yeah, there was a diamond on the 3 minute. That made it a very good, because on that first one, it wouldn't have shown much over here. You want for the second one. Yep. I mean, that would have been, I mean, it is counter trend, but you got permission on the 1 minute. I mean, there's a lot of for the main bar signal, not a lot of stuff creates it, but there's like 6 factors that all have to line up to get a counter trend signal. So that's what I've written the code for.
Which make that signal.
So it makes it, for counter trend, it makes it quite safe.
Yeah.
What about the 3 minute counter trend that's popped off right there that is clearly reversed?
Okay, so then you'd apply the rules. The first one is there clear space? And it's definitely not. You're trading straight into a resistance zone. That would immediately make it high risk. So you wouldn't take that for that reason. There's not enough clear space.
Personally, I would probably get sucked into that because of the MACD and the angle.
But what about
Like-
the diamond on the 1 minute, the red diamond?
Over there,
Yeah.
So that's
yeah, there was a re-enter there. But you remember that the further you get away from the first signal, the high risk it becomes.
No, I meant like that red diamond on the 1 would have stopped me from taking that
One of the three.
one.
Oh yeah,
correct?
oh yeah.
Yeah.
I mean, did you get a green diamond to say re-enter?
That's like
True.
the reject
Yeah.
55, the 233.
But look, then
There.
what you would do, I would then, if I was looking at that, I would also have the 8 minute. Like guarantee, if we put the 8 minute up, well, let's do that. Okay, I've put myself right out there now. If it doesn't work, I'm going to quickly take it off. No, I'm just kidding. So let's see. So we're looking at the 8 minute at 7:18. Okay,
double click price.
and then it goes very narrow. I did that.
Might make it
Oh, there we go. So 7:18, what we were looking like on the 8 minute.
further. It's 230.
Ah, gee, time flies when you're trading. So look here, 7. I mean, that's a no-no. 7. You'd never enter. Okay, let's do it exactly. I mean, that is way too late. But look, would you take a trade? Look at that. I mean, that's coming down. If you enter early, there's grace. I mean, it did move, but that, if you looked, remember 3 minutes, you need to look at the 8 minute, and that is like right on one of the strongest reversal points ever. So, I mean, there's like about 14 rules I've got, and that would have stopped you taking that. But the 1 minute, there was enough space to move.
And I mean, the bands might have looked a little different, but it is at the top of the
Oh yeah, that's a no-no, gee, because you,
breaking out. Like
This
that's
is
the
the-
most likely point it'll turn around.
yeah, that is the worst in terms of the orbs. That's completely out.
This second issue, correct? These candles.
Me pardon?
I've always wondered, like, do you enter at the close of these candles, or at what point do you enter? Because like the thing about Shravik is like it will just shoot for ages, and then
And I enter as soon as when I get a signal and it sticks to the rules, I enter straight away. Or sometimes if the signals come after 30 seconds, I may wait 30 seconds, and I'm then in those 30 seconds I'm checking high time frames, the 3, the 8, and then as soon as a new candle opens. So if it's like 8 out of 10, everything agrees. As soon as I see buy or sell, I'm in. Like, I mean, I entered straight away on that 6 o'clock signal. Where was it? Where we go? That the 6 o'clock signal? Looks familiar. Yeah, I entered straight. As soon as I saw sell, I mean, the kicker for me, as soon as I saw, I scanned, and when I saw that, there was like the triangle down in the 3 minute at the same time. I was in straight. I thought that one's definitely going to be.
So that triangle was there in the first minute.
It came. Sometimes it takes a while. It doesn't post straight away. In this case, as soon as that plotted,
It looks like before the sell signal on the 1, there was already a drop, like a little bit. I can't quite see it, but the 1 minute candle just before the signal. So that would have possibly
Yeah, that could have,
diamond.
yeah.
It just depends on what time that.
So I mean, these triangles are very powerful, you know, I call them reverse re-enter. So in that case, it's like a re-enter triangle.
I think by the time I got confident in that one, it'd gone too far. I thought it was going to do a double bottom.
Yeah.
And so I was a bit late, I think.
But remember, like the other things we'll learn, like rejecting a line, I said before, look how many times it rejected the 55, you know, that 3-minute trend zone. So that was a sign it was definitely going to move down. Cool.
Those pivot points, I don't understand.
Okay, then we'll need you to hold lesson on those. So basically, those are based on the previous day's highs and lows, and then they're based on Fibonacci numbers, and then calculations are done to work out like S1, S2, S3, S4, S5. And so it's based on the previous day's highs and lows. Well, that's for the daily ones. Then the weekly ones are based on the previous week's highs and lows, and the monthlies, the previous months. And
being support 1,
yeah.
support 3, R1, resistance 1. Like, I didn't know that for ages. It was just like R1 and S1. What's that?
Oh, didn't you know that?
No,
Oh.
well, years ago, but I mean,
Yeah.
yeah, it's basically just differing intensities of support. So if you're at like an S5 or an R5, the greater the extremity, the more likely it's going to reject. But like I don't put as much weight on like a daily S1 and R1 as like a quarter.
Oh, what? I've messed it up, Ty. I've dragged it down into the bottom here.
Oh, that's okay.
I'll just delete it. Now my head is covering where I want to click the button.
I don't know if this will work or not. Let's just see. No.
No, there we go. Okay.
And yeah, undo, control.
Control Z.
Okay, there. So I'll hand back to you, Ty. Thanks very much.
Okay.
There we go.
Oh, thank you, Dad.
I gave away too much.
That was
for later in the year, but that's okay.
so much gold. Okay. Yeah, just rewatch. That's all I'm gonna say.
No, edit it out. So only those who came tonight get this. I'm just joking.
Sucks
Yeah.
to be
Yeah. No, but really, I mean, hopefully, if anything you guys saw tonight, the layers inside of this thing and the tension of us is that we want to race, but we're trying to like move at the pace, like even the counter trend signal, like you'll want the signal, but you're then just going to be looking at more information before we're just trying to get rid of the training wheels, put it that way. I don't know how else to say it, but it'll happen in time and it just gets better. So once again, Dad, thank you for the insane amount of time, effort, love, for putting this together and not hanging your boots up either. I mean, just constantly fine-tuning, looking at every loss and going backwards and reiterating and changing things because we're committed to making this thing the best. I mean, what we didn't say is when we had those chats with Black Bull, we did also show them some photos and show them the charts, and you should have seen the guy's face. Because his words were, I've never seen anything like that before. Never seen moving averages that have lit up, never seen this, never seen, like, it was encouraging, to say the least. I mean, so they're keen, I mean, to see people obviously succeed in this space because they see the numbers behind the scenes of all the classic cliches of the 90 people, 90% and whatever, 90 days, all that kind of stuff. And I don't want to say we want to make them go broke, but we definitely want to make some money because they're definitely making money. Like, they're doing great. And they want to see the space expand, which means that obviously people need to be winning. So anyway, all that to say, we will wrap it up there for today on that. So if you're watching this later, God bless you. We'll see you in the next one.